All right, now we can proceed to the question. Let's take a look at this question. Now, this question is the continuation of yesterday. Test understanding number 4, it says, this question follows on from previous test to understanding. What are required to do? Explain the subsequent treatment of dynamics lease in the year ended 31st December 2021. Now, if you do remember from yesterday we just did, we are just trying to write down the double entries for the initial recognition when we are debiting the right of use asset and crediting the lease liability. We did not account for the right of use asset subsequently, but also we did not account for the lease liability subsequently. And that's what we're going to do right now. Actually, I already demonstrated this, but no worries, let's just go through it. Now it's number 4. Maybe you go back to the question so that matters can be much clearer. Let's go to what? Let's go back to the question, the beginning of the question. Yes, this was the question. This was the question. This one. This was the question that we are dealing with yesterday. Now, if you do remember, the question said on 1st January 2021, Dynamic entered into a 2-year lease for a lorry. The contract contains an option to extend the lease for a further year. And Dynamic believed that it is reasonable certain to exercise this option. Lorries have a useful life of 10 years. As we said now, the lease was for 2 years, but there was an option for 1 year, which was actually certain to be exercised, and so it gave a total of 3 years, while the useful life of the lorries is 10 years. Okay, and then we were given the lease terms that lease payments were $10,000 per year for the initial term. That is for year 1 and the year 2 initial term, and $15,000 for the 3rd year. Now, all payments are due at the end of the year. As I told you, payments can be in arrears or in advance. In this case, they are in arrears. Also, we are told to obtain the lease Dynamic incurs initial direct cost of $3,000, and we said yesterday that initial direct costs are obviously added to the cost of the right of use asset. If you pay that amount, you credit cash or bank by $3,000 and you debit the right of use asset. You have paid for something so that you can have the right of use asset, so it has to be capitalized, right? Also, you're told the lessor immediately reimburses $1,000 of these costs. So it means that it's like Dynamic didn't pay $3,000 because he used $3,000, but $1,000 was given to him. So it's like he just paid $2,000 just like that, right? Okay, you are given the rate that we are told that there is no rate implicit in the lease, but we are given the incremental borrowing rate. We said that if you do not have the rate implicit in the lease, you have to use the rate that is the incremental borrowing rate. So yesterday the question just required us to determine the carrying amount initial for lease liability and right of use asset. But right now we need to go further. So you can just go to that question. Yes, I think. Why the question? Let's find it. Yes, here. 1, 2. Yeah, here the case. We did this yesterday. So we just said to obtain the lease liability, you have 10,000, 10,000, 10,000 again, and then you discount them and have this figure, this present value. We spoke of present value yesterday. So if you have this one, then we said you credit lease liability by this figure, and then you debit the right of use asset by the same figure. Just as you see here. Debit right of use asset here by 31,552 and the credit lease liability by the same figure. Now, when you go to the initial direct costs were 3,000, but actually 1,000 was being reimbursed. So it's like Dynamic paid only 2,000. So that initial direct cost, which is 2,000, should obviously go and add to the right of use asset. So the total on the right of use asset should be 31,552 plus 2,000, which would give 33,552, just like that, right? Yes. Now, that's no big deal to us. What we are required to do here is the subsequent treatment. So all you need to know right now is that you already have the opening balance for the lease liability, but also the opening balance for the right of use asset. As for the lease liability, you have this opening balance. As for the right of use asset, you have this opening balance. So on subsequent treatment, that's what we're going to do right now. Okay, let's say you start with the lease liability. We just go the same way as I showed on that amortization table. Yeah, I think the amortization table hasn't been used. Yes, they should have done it this way. I wanted us to do it this way, like this. This one is the best way. You just write here, yeah, as you wrote there. Then you have the opening balance. You have interest, the payment, and the closing balance. But be careful on this payment and the interest issue. If payment is made in arrears, that means payment is delayed. So put interest first. You compute your interest, take 5% of this opening balance. In case payment was immediate before interest, payment was just in advance, you would have to take this figure, subtract payment first, and then use that remaining figure to obtain this 5%. Right. So that's why in our case, the arrangement has started with interest and payments because it's the payment in arrears. I'm repeating again, in case of the payment in advance, you would have had to switch payment and interest. Okay, so I think start using this table, it will be much easier for you. So as for the first year, this was the opening balance. Now, how do you obtain interest? Interest, you just take 5% of this opening balance figure. So 5% times, if you have a calculator, you can just multiply there. Don't just look. 5% times 1,552, you would obtain 1,578. Then as for payments, the payments were already stated. At the end of year one, 10,000, end of year two, 10,000, and end of year three, 15,000. That was already stated. So this is what we would have here. And actually, it's what that you always find here. You know, even when we are determining this liability figure, we mentioned them 10,000, 10,000, and 15,000. So these are the cash outflows, and so they directly relate to the payments. So let's just go here. So I would say this figure here plus interest would increase liability, then less payments, you would arrive at 23,130, just like this. And then this is the closing balance of year one, it becomes the opening balance of year two. That's why it is totally copied, just like I demonstrated. After having this now, you determine interest again. You have your 5%, the rate implicit in the lease or the incremental borrowing rate. So 5% times 23,130, you would obtain 1,157. And then the payment usually at the end of year two, we are given as 10,000. If you add in less here, you remain with 14,287. You could proceed actually to year three, but look, even them have not that, they have not done that. Even they have not done that. Why? Because the question asks you up to the end of year one. So if they ask you up to the end of year one, we have added here year two with the aim of being able to split the non-current and current components of the lease liability. That's the main goal. So in case maybe they had asked us about year two, we would have had to increase an additional row here for year three. I hope you got me. Okay, so this is what we have to do. And just as I said, this interest goes to finance cost in the income statement. This payment is just a cash outflow, so it goes to the statement of cash flows, and the closing balance goes to the statement of financial position, just like that, right? Okay. So, you know, this is just like a summary. They just started here, but you really need to know how to do that. Double entries. They debited finance costs, 1,578, and then they credited lease liability, 1,578 again. Now, I hope you see what happens. You know, when you deal with this amortization table, inside here, we only deal with the liability. So you have to take a look at the figures up here to determine the second part of the double entry. For example, here, if I increase this on the liability, that means I credit the liability. That's why they wrote above credit liability by this figure and debit the interest or finance cost in the income statement. Take a look here, you see, oh, I've increased the liability, then increase the finance cost. And here I've reduced the liability, I've paid cash, so I credit cash. So they have just taken one figure, this figure here, they put the double entry, and then this one here, and another double entry. That's what was done up here. For the first case on finance cost here, but also for the second case on the cash outflow, the cash payment. So this shouldn't be much of a bother to you, right? Okay, so and then they spoke of the liability, splitting the liability into its current and non-current components, just like I told you and showed you that way. Here, at the end of year one, we have a total lease liability of 23,130. 23,130. But 1 year later, fast forward 1 year, and the liability only remains at 14,287. This only goes to show you that there is part of a liability that can be extinguished in 1 year's time. So this which remains even after 1 year is a non-current component, and the remaining balance is obviously going to be the current component. So the non-current component should be 14,287, and the current component should be the difference between this top figure and this bottom figure. Just like that, and you are done. You know, no complication, it's just normal. That's why they're saying the liability as a carrying amount of this figure at the reporting date. Of this, they are going to specify 14,287 is a non-current, and the remaining is the current component. Right? Just like that, no worries. By doing that, you have completed everything of the non-current liability part. Then we just go to the right of use asset. This too is very obvious and very easy. As we agreed, in most cases, when just do the right of use asset, you can just compare the lower, the useful life of the asset and the lease term, right? The whatever which is the shorter, you can just use it. So in our case now, you know, before depreciating anything, because we said at first you use the cost model, but if something maybe is an investment property and the investment property maybe requires to use the fair value model, you can use the fair value model. But for this case, nothing has been stated. And actually, what was our assets? All right. Even the question itself was not specifying whether it was an investment. It didn't say it was an investment property, and also they didn't say they are using the fair value model. So it's not much of a big deal. So you have the right of use asset, which had a cost of, it was what? The cost was, this was the cost, 33,552. I hope you do remember that we obtained it here. Where? This one. We took that amount of liability and then we added 2,000 to arrive at this figure. So now you just compare. We are told that lorries have a useful life of 10 years, but the lease term was only 3 years. So it's obvious that you have to depreciate it over only 3 years. Because after 3 years, now you have to remember that we are depreciating not the asset actually, we are depreciating the right of use asset. Our right only lasts for 3 years. So depreciate it over 3 years, and then for that 7 years, the lessor will know what to do. If the asset is going to be in the possession of the lessee, then no issue. We could have used 10 years, but in this case, we would say that the depreciation should be over 3 years. And then, as you know, the common method of depreciation is the straight line method, which says cost minus residual value over useful life. Cost is this one, 15,552. Residual value not given, so put it at 0. That's why it's not written. Over useful life 33 years, just like this. And you obtain 11,184. So this is just a normal thing. You know, when you depreciate an asset, you charge depreciation and you reduce the carrying amount of the asset. So there be depreciation to the statement of profit always as usual, and then reduce the right of use asset, reduce the amount of the non-current asset. Just like that, and we would have the carrying amount now. It would be this initial amount minus depreciation, which is 11,184, and you would arrive at this balancing figure. Not balancing figure, actually, right? You arrive at this remaining figure. Okay, so I hope you got this. I hope now you can somehow deal with the question of lease. Up to that point, actually, you won't incur anything that is very different from what we have done as far as the Lessee accounting is concerned. But we are not done yet. We are not done. Let's go for, let us let us find something else. Let us find something else here.